welcome to your Monday download. Got a few things I want to go over today with you. Apologize for the halfway awkward pause there at the beginning. I'm trying to get it so that I don't have really stupid clips of me with my mouth half open when it posts on YouTube, so we'll see how it goes. Anyway, I want to start out today with a shout out, which is something I really like to do, especially when I feel like there's something noteworthy that I want to give out to everybody. And today's shout out actually is a shout out to part of the team at Alliance here, and these shout outs are for agents, they're for our team, they're really just something to bring out when somebody's doing something exceptional. And so this is to Connie and Aaron, and Connie and Aaron did something really great with the Homeowners Association last week, and for those of you that have dealt with the Homeowners Association, you understand how challenging they can be. Honestly, if I were to kind of put a line, a graph of the most challenging liens to deal with, Homeowners Association would probably be at the top. They're more difficult often than a judgment. They are definitely more difficult than a tax lien, federal tax liens, and they are definitely more difficult than a regular mortgage lien. So anyway, let me tell you a little bit about the story. This in particular Homeowners Association, there were about $500 worth of association dues that were earned, basically the monthly dues up through closing. And we always estimate out, we try and estimate further out because of course sometimes short sales take a long time. That might be considered an understatement. And so we have to estimate ahead, hoping that we can estimate far enough out that we're able to cover the Homeowners Association. Well, in this particular situation, in the few weeks before we got the approval letter, which I forgot to mention, we have an approval letter in our hand now. We're doing final updates, sending everything over to the closing attorney and getting final numbers back from the closing attorney. And this Homeowners Association all of a sudden is $2,900. Like, holy smokes, where did that come from? And it seems as if in the period of time from when we started until we ended here, the Homeowners Association had assessed exorbitant amount of fees and legal charges, late penalties, all sorts of things that brought the amount due up to $2,900. Well, that was far above what we had estimated at $30 or $40 a month for Homeowners Association dues. I mean, that would have been years worth before we got that far up. So here's what happened is Aaron and Connie did a tag team on this, and that's the creativity that they utilized to be able to get this taken care of is really where the shout out lies. Connie had built some really good rapport with the representative over at the Homeowners Association early in the process. The HOA was being very difficult in getting us payoffs. They actually said, hey, this is turned over to collections. We don't send out payoffs, so sorry, tough luck. Well, Connie was able to build some real rapport with this lady, and Connie actually was able to get this lady to pull it out of collections completely and to send the statement over so that we could know what we were doing with the HOA. So Aaron asked Connie to kind of soften it up. Connie initiated the conversation with the Homeowners Association. Our ultimate goal here, just so you know, was to get the HOA to drop their fee, obviously, to short what was owed. Freddie Mac was the investor on this particular loan, and they only allow the dues themselves to be paid out of closing costs. Any fees and penalties and attorney's costs and all those kind of things, they will not approve. So what ended up happening is Connie went and kind of broke the ice, softened this lady up, and then asked if Aaron could get on the phone to kind of explain some details that we were running into that were creating some problem with closing. So long story short, Aaron had two conversations with the HOA that day, and the Homeowners Association bill went from $2,900 down to $800 literally in the same day, and which is, I can't even tell you how proud I am of our team for really getting in there and making it happen. So Connie, Aaron, thank you so much, not just for going after it, but for having a really creative nature in how you went after it and making sure that you we're thinking outside the box in how to get this homeowners association to reduce that, because this was going to be very problematic. Freddie Mac wasn't going to pay for it. Unlike most of our transactions, the realtors were having a reduced commission because of what the bank was demanding. Our fee was already reduced to make up some stuff to try and get this thing closed. So it was really bare bones to get this deal closed, and to have an extra $2,400 that wasn't allocated in a homeowners association, was going to make it really difficult, if not impossible, to close. So anyway, really proud of them, and thank you for doing that. All right, let's get into some other stuff. The first thing I want to talk about is just some logistics. Electronic signatures. I love them. They're so cool. DocuSign. It was just unbelievably convenient whenever I've had to use it. Here's the problem. The banks don't like it. So they actually are sending stuff back to us saying, sorry, we need an original signature from the borrower. And that's the problem. It's the borrower. They want to match the signature on the purchase agreements and the authorizations and all that stuff. They want it to match the signature that they have from the borrower when they sign loan documents. So obviously an electronic signature, though legal and able to close on the transaction, that's not their beef. Their beef is that it doesn't match the signature of their borrower. So not that we want, not that we need any more work in a short sale, but you're going to need to get original signatures, or the banks are going to just send them back. The bigger banks especially are the ones having trouble with them, and I can't imagine that the little ones won't. It's just we haven't had a lot of electronic signatures to send to little banks, so we're just guessing. But start getting original signatures on your short sale transactions. In closing here, take a few minutes. Been a lot of talk about Bank of America. Obviously with the Equator transition, and Bank of America is a huge lender out there. We're dealing with them on a regular basis every single day. Many of you know that I worked at Bank of America for several years, quite a few years actually, before we started Alliance Short Sales. And I want to kind of dive inside a little bit of Bank of America, kind of help you understand a few things. First of all, there is a difference between a normal first mortgage purchase loan or refinance loan at Bank of America and their equity product. More than just the type of loan. The first mortgage, and I'll just call them traditional first mortgage loans, are just like almost everyone else out there who packages a loan, does it, sells it off to the secondary market, Fannie Mae, Freddie Mac, whoever they sell it to. So they service it, but they don't actually own it. It's somebody else's out there that they're just servicing. The equity product is completely different. It's what we would call a portfolio loan, meaning that it's held at Bank of America. So what is their equity? What are their equity products? HELOCs, home equity, which is home equity line of credit, any other second mortgages, and they also have, and this is interesting, some first mortgage loans that fell inside of the equity product line. So we would have a 15-year fixed mortgage that might fit, it might be usually a second mortgage loan product, but it was in a first lien position, so you got better terms if it was in a first lien position, but it still falls within the equity product guidelines. Here are some of the guidelines. They're going to do an automated appraisal with an automated system at Bank of America instead of sending out a BPO agent. The reason that sucks is because that automated system is almost always astronomically high. It's this, I'm betting, and I don't know this for sure, but I'm betting it's the same automated system that they used when we did our loans while I was there. They wouldn't send out a normal appraiser on the equity loans. They would just do a quick automated appraisal of the property. I mean, they literally didn't even go to take a picture and see if the property was there. It was just literally what did it come back at. And we would laugh because it came back so high. I mean, we'd call up our clients and say, hey, this is $50,000 over what you thought it was worth. Do you want to extend your loan to the percentage of that higher dollar amount? And they usually would. Part of the problem that they're in, part of the reason they're in this problem with some of their equity products. So the issue is that Bank of America, because they don't send out a real BPO, they have a very bad perspective as to what the value of a property is. Now, what they will do is they will look at an actual appraisal on the property. However, they won't pay for it. And so what the challenge is that the seller usually doesn't have the money to pay for it or isn't willing to pay for it. Buyers almost always are not willing to pay for it, unless, there's a little side caveat, that the buyer's lender, if you have rapport, you've talked with them, maybe they have an automated system that they can kind of throw an appraisal together that we can utilize to combat that appraisal that B of A has. But it's highly possible that it's going to come down to an actual appraisal paid for by somebody else. And we have a couple of them right now that we're looking at with a list agent to see if perhaps Alliance and this listing agent would be able to split the cost of that appraisal so that we can try and get this thing done. Just be aware of that. If you're dealing with a Bank of America loan, especially if it's an equity product, that's what I'm primarily saying. It's not part of the Equator system. They go through the old way of doing it, and it's going to potentially be a little more challenging. Don't avoid them, just be aware. Make sure you position everybody to that fact. So that's all I have for you today. Have a great week. Email me your questions. Don't forget we have a call on Wednesday, and I will talk to you very soon. Thanks so much. Bye.